Certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? You know, this isn't a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinata is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud.
A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against J.P. Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with J.P. Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day, she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
Beverly started to panic. She got really upset and called, J.P. Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to J.P. Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place, the granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door, and he's screaming about what was sent to the J.P. Morgan. They're now investigating now. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in J.P. Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. Over the course of their time with J.P. Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as J.P. Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from J.P. Morgan. They issued an award of about $19 million. I reached out for comment, and J.P. Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. It seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory, and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s when everyone had a nickname. His was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollars trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3. Amongst that, was very successful and made very large amounts of money as a young man. But inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, drinking buddy's son, or they're his own kids' friends from football. They're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. Not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Thaden Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. Anyone that covers markets is going to be surprised about that. You're thinking your BPs of the world or your Glencores, but there's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there had been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. They are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to 700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. The law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had has kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it. Might be you could be fined, you could be banned from trading, and in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. One obvious one is going to be they're able to walk away from this life-changing trade with all the money that they made, and celebrated as heroes in the trading community. That, you know, they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that, you know, we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system, and you end up in sort of a race to the bottom, and that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, you know, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single super city economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network. That in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, HART's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects. And the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, And we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's done super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, it's kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial. It'll never be supplied in the quantities we need it. You know, blah, blah, blah. Now we know, let's take action. It's practical. It's implementable. Let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world.
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time, economically, is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick. It's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How
long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kibby Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's world headquarters in New York, and this is Bloomberg Green.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's like really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space like really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special. And so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had like less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Heron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Srostra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA,
Yep.
and then just roll out when you want.
It's my daily driver. Handles great, and then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over. That's cool. We just pop that up.
Sort of.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. Like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and don't go in the valley. Yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke. Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky,
Look at it.
strip malls of the Central Valley.
We have made it sort of out of the smoke all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And so we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines. And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
I like you. Who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is Ellie Q.
Can I take her out for a spin?
Please.
Ellie Q, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
Ellie Q isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
Ellie Q, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month. How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of Ellie Q, from the way Ellie Q moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
Ellie Q, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. Ellie Q?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more. because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas. Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style. So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while. And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water, at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling. Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence, robots, will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. am using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, if I post a video when there's no ads being spent like January and February, that's a reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
It becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, Ronald McDonald, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
if you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point, because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
I'm just going to say it. I know the feeling, Mike Regan. Mike was taking off his headphones like, I'm done already. I'm like, no. It's just been that kind of a day, that kind of a week, that kind of 2 weeks when it comes to the news flow. Good afternoon, everybody. Live in our Bloomberg Interactive Broker studio. Carol Masser, along with our own Mike Regan. Tim, as you know, is on leave. There is a lot going on this Thursday. We thought the Fed was the big news, but that's, man, way in the background, if you will. Stock gains, they're fading. Treasury yields, especially the shorter dated treasuries, they're moving back down again. We're going to talk about the trade with our TV colleagues, Countdown to the Close simulcast in just a moment. We got to talk about TikTok CEO getting grilled on Capitol Hill. I don't know if you were watching any of it, but whew,
a little bit, yeah. Really combative reception he got there in D.C. for all the reasons that everyone knows about, I guess. But
yeah,
testy exchange.
All right, well, our Alex Barinka's there, so we're going to check in with her. We're going to talk about Hindenburg Research's latest big short. It is Block, and that name is certainly taking a hit in today's trade. We're going to also talk about Apple's $1 billion spend on films, looking to get even bigger when it comes to content. And we're not talking about on the little streaming screens. We're talking about on the big screen. Ford, $3 billion in losses. Mike, we got a little bit of a heads up yesterday on that story, but Ford shares I saw earlier, they were higher, but we'll break down what that news is all about.
Yeah, right. It sounds like very centered on electric vehicles, so it's something to keep an eye on.
Yeah, some big losses. Plus, all those drug ads on television and online, what you should be aware of. Fascinating research and a study out of Johns Hopkins, so we'll get to that in just a moment. And then we've got the CEO of GeneDx on using genomics to improve health. I'm all in for different ways that we can make us all healthier. I don't know about you. How you feel about that?
Whatever it takes, yeah. I'm not getting any younger.
Hallelujah, hallelujah. All right, having said that, we are seeing stocks just hovering near their lows of the session, still holding on to about a 0.5% gain on that NASDAQ. S&P, though, call it flat, just down 2 points, Dow down about 65 points. Right now, though, we're going to head over to our TV team, talk about the trade. That's because Countdown to the Close starts right now.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic alongside Katie Greifeld, joined right now by our colleagues Carol Masser, Mike Regan filling in for Tim Senovic today. Welcome to our audiences across Bloomberg Television, Radio, Originals, and those folks streaming on YouTube. Some breaking news crossing the wire right now. The Treasury Secretary of the United States, Janet Yellen, saying that they are prepared for additional deposit actions if warranted. This is part of prepared remarks that Treasury Secretary Yellen has prepared for a House panel that she is expected to start speaking at right now at 3 p.m. Washington time. The main headline, Carol Masser, is that the Treasury Secretary is prepared for additional deposit actions if warranted.
Okay, that is key because what she said yesterday certainly put a lot of pressure on the bank stocks. I'm right now looking at the Spider S&P Regional Bank Index, and it is now up still down about 1%, but it's moving off its lows significantly. We have seen this sector battered again today, Romaine, which made us all wonder, it's not getting any better, but this certainly helps shore it up a little.
We should point out a pretty big spike here right now in stocks across the board. We were just talking a little while ago about the downdraft that we've seen in stocks turning into the red, now back into the green. A big spike in the S&P, a big spike in the KBW bank indices here with the headline, the Treasury Secretary Janet Yellen planning to tell U.S. lawmakers that they are prepared to take further steps with regards to deposits. Michael McKee is down in Washington. Kaylee Lyons is also down in Washington. They're joining us right now. Kaylee, let's start with you. What more do we know about what Yellen has planned?
Well, clearly she is walking back some of the remarks she made yesterday, or maybe at least attempting to clarify. After yesterday in the Senate, she said they are not have not considered a blanket insuring of all deposits in the U.S., but she is making a point here to say that they acted quickly to prevent contagion, and they have tools that they would be able to use again to ensure that all Americans' deposits are safe, which is then when she goes on to say that they are prepared to take additional action if warranted. Because remember, as we've heard from Yellen over the course of really the last several weeks, she has said that there are exceptions that can be made in systemically risky cases like with Silicon Valley Bank or with Signature Bank. Maybe what she said yesterday was just saying we aren't considering doing something wholesale at this point, but should there be specific action that needs to be taken, they aren't afraid to do so, seems to be the message from the testimony she is planning to give shortly here.
And Michael McKee, this seems like this is more of a clarification than it is sort of a walk back, because if you think about what she was actually asked yesterday, it was whether Treasury was planning any sort of blanket deposit insurance without congressional approval. They would still need congressional approval.
Yes, unless it were what Kaylee mentioned, a systemic situation, which is the reason that they were able to do SVB. But that means they need to get 2/3 of the Fed board, 2/3 of the FDIC board, and the Treasury Secretary to agree to do that. And Yellen, as you point out, was asked yesterday, I think, about the letter from the medium-sized banks lobbying group that said we would like a 2-year blanket insurance policy on everybody who's insured and uninsured. And she said, well, we have no plans to do that. And what she meant, and I think went on to say it in a little bit of a confusing manner, was that's up to Congress. Congress has to authorize that because right now there's no systemic reason for us to do it. But clearly they've looked at what's happened in the markets, looked at what's happened to bank stocks since her testimony yesterday, and they felt they needed to do, as somebody put it, clean up on aisle 1600.
All right, and we do have the KBW Bank Index and those regional banks certainly popping off their lows, and the overall equity trade moving off its lows. Mike, having said that, and that's where I want to go with you, did the Treasury Secretary get religion? Did she get a call from Jay Powell? I mean, what's the thinking, or was it truly just looking at the market reaction? What do we know about that?
Well, I'm sure there were a lot of calls around to various offices in the Biden administration about this, and probably over to the Fed. But it's basically the markets are telling the Treasury that the Secretary was misunderstood. They know what she wanted to say, but it didn't come across that way. It's very unusual to make a clarification like this, but I think it gets to the point of what she was trying to say much better than she did yesterday, which is why they decided this was not only worth doing, but worth doing before the markets close.
Yeah, to me, I think what sticks out, the words that stick out to me in this headline are, quote unquote, if warranted. Kelly, I wonder if we have any sense of what that means. After all, with Silicon Valley Bank, the deposit backstop didn't occur until the bank was already in FDIC receivership. Do we have any sense of what that if warranted would mean going forward?
Well, if they see the kind of systemic risks that are required in order for them to have the authority to take that action, clearly there is a bit of nuance there as to what exactly that would mean. But anything that basically would risk contagion into the broader financial system and therefore economy loosely is what that implies. So it does beg the question of if warranted, they're looking at the likes of First Republic, for example, if they cannot get any form of further aid together, because we know that the government is involved in the discussions with Wall Street about how potentially they could make that rescue happen, or that be a deal for that bank in particular be facilitated. So maybe that is something that they are watching very closely. I know that is front of mind to a lot of us down here in Washington. But again, warranted, probably up to a bit of interpretation. I think just the broader takeaway from the Treasury Secretary here is that if we see something we think we need to move on, we will move on it.
That's very reassuring. The question is, where do they get the money? We do know that some of these measures that they seem to be pitching would actually require an act of Congress. Mike McKee, I am curious if there are levers that the Treasury Department has, that the federal government has, that, well, the Federal Reserve has, that maybe can circumvent whatever sort of nonsense is going on in Congress.
Well, there are some things they can do, and it looks like last week they did do a little bit of that. We'll know a little more when we get to the Federal Reserve's balance sheet numbers later today. But it looks like they lent money to the FDIC so that they didn't have to go to Treasury and get additional aid. But the point is, at this point, it looks like they're not going to need it because it looks like there was enough cash at SVB to make the depositors whole. So the FDIC going into this had $128 billion. It would take a lot of bank failures and a lot of losses. Remember, a lot of these losses are recoverable. Even if they're not insured, the assets may still be there. For the FDIC to get to the point where it was out of money is a problem, though, with the debt ceiling if they did run out of money.
All right, going to leave it there, guys. Mike McKee, Kaylee Lyons, both there in D.C., and, of course, Mike here as well. Guys, we really appreciate it. Again, that headline, Treasury Secretary Janet Yellen planning to tell U.S. lawmakers that they are prepared for additional deposit actions if needed. And we have definitely seen a lift in the overall market trade, and certainly in those banks. But I will say, if you take a look at First Republic, we're still seeing it under pressure again, down about 4.5%. We're going to continue this conversation, certainly banks front and center. We'll be back. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We're going to count you down to the close. We'll see how the markets end up, how those bank stocks end up at 4 p.m. Wall Street time. Headlines out of Janet Yellen. In the meantime, certainly on our radar is shares of Block, because we have seen them take a major hit as a result of some research out by Hindenburg. You remember, that's the firm run by Nathan Anderson, bolstered its profile with that scathing report on billionaire Gautam Adani's business empire earlier this year that really took down that name. Well, right now, he and their team has set their sights on Block. They did a 2-year investigation, and just about 1.5 hours ago, Block fought back a little bit. So let's get into it with our own Bloomberg News finance reporter, Kat Doherty. She's here in our Bloomberg Interactive Brokers studio, joining myself and Mike Regan. And I just want to check, shares of Block are down still about 16% off their lows, but still taking a hit. All right, Kat, what, first of all, did the Hindenburg research say? And I know it's out on social media, so people can read it as well, but what were the highlights or lowlights?
The lowlights that they're alleging is that this company took advantage and facilitated essentially the fraudsters who were then using government stimulus programs during the pandemic and essentially allowing folks to have multiple accounts. So even if an account, the report would say, had been flagged as fraud, that account was then tied to multiple other accounts, and it wasn't dealt with in a proper way. So essentially, I think that was the key here, is the extent to which the fraudsters could actually take advantage of the system. And so this report goes further into saying that they manipulated certain numbers, and that they either didn't go far enough to say how many of these accounts were fraud, or that they understated especially the customer acquisitions as well.
So that obviously, if true, it would have inflated Block's business, correct? The metrics then would be off, the financial metrics.
Correct. So then Block came out and said that these claims were inaccurate and misleading. They're saying we are registered with the SEC, we report factual, accurate information, and that the report that we saw from Hindenburg manipulated information, and it was not an accurate depiction of what's actually going on.
You know, Ken, I think when I think of Block, I think of the sort of point of sale, use a tablet, iPad or whatever to swipe your credit card at a small store or something like that. This seems to center on a different Block product, the Cash App. Is that basically the gist of it, that most of this fraud that Hindenburg is alleging was using the Cash App?
A big part of it in the report does seem to be that this Cash App was likely facilitating fraudsters taking advantage again of that government stimulus program. And in response, the state of Massachusetts, this is something that was referenced, told the short sellers, so this report, that it sought to claw back close to 70,000 unemployment payments from the bank behind Cash App accounts. That's something that is referred to in this report. So again, we'll see what the company actually comes back, and they said that they're going to take some legal action, and they probably will have further statements to provide. Right. But this was a report that was facilitated or underwent for 2 years.
I just want to reiterate. So the research from Hindenburg says Block has widely overstated its genuine user counts and has understated its customer acquisition costs. Former employees estimated that 40 to 75% of counts they reviewed were fake, involved in fraud, or were additional accounts tied to a single individual. If that is the case, and I'm curious as you guys are reporting this out, looking at Block and looking at its balance sheet, how would that materially, financially change the story of Block?
Well, I think the first thing to look at is regulatory response. So this is going to be, this is already a regulated company, but it's going to be scrutinized, and the report is going to be cross-checked, I'm sure, with the public information that's out there. So that's the first thing that I think is going to be the next course of action. Mm-hmm. And then as information starts to come out, either a company may clarify certain things, or who knows, parts of this report could be corroborated, in which case, if things are proven true, well, then we have other problems, or the company has further problems and answers that they need to give.
But I guess my case is like, Mike, I think if that's the case, if that's true, right, it's a very different in terms of how you value the company, how you look at the growth in the business, or lack thereof.
Do they need to restate earnings, or, you know, is it really facing a big fine and punitive damages that has everyone concerned in the stock price? But, Kat, you know, one thing I think is interesting is they're not the only company who's had to deal with fraud claims when it comes to the government stimulus payments. Other banks have too, right? Is it just that Block is way, at least according to Hindenburg, just way out there as far as how many they allowed happen?
I don't know the exact comparison in terms of numbers. I do know that there have been other banks that were caught in, it was like credit card payments when the government was giving out stimulus on the form of what was essentially debit cards, and those were manipulated in ways where people were taking more debit cards than they actually were allowed. So that's another case. I think this is very different. It sounds. I'm not exactly sure how the app. It seems like how the app was used was just adding more accounts, and so you had one person, but they're taking advantage and using multiple accounts, so they're therefore getting more stimulus when they're only supposed to be allowed to use one account.
Yeah, and it's interesting. You do have the analyst community, you know, starting to weigh in. Certainly, Raymond James came out earlier today contending that the report and the short by Hindenburg doesn't include a lot of new, in quotation marks, news or a bombshell, and argues that the biggest risk is potentially drawing scrutiny from regulators and politicians, which would create some overhang on the stock. Right now, you've got 41 buys on Block, 10 holds, and 2 sells. So, you know, Wall Street, for the most part, likes this. I was curious, and forgive me if this is out of your purview, but when I think about short sellers, we're always so careful, right, when we bring up a short seller, and we always want to make sure we get a comment from the company. But having said that, what are the law's rules, if you will, if any, when it comes to somebody coming out with a blockbuster report like Hindenburg and being such a short on the company? What are their responsibilities?
So we've seen a number of reports from Hindenburg, most notably recently Adani,
right?
And we saw Clover Health. And these reports, they are allowed. It's not as if once these reports come out, then they
Just
get in
the flip
trouble
side
for
to a
putting
trade,
out.
right?
Yeah, exactly. It's as if another analyst is putting out. I mean, it's commentary, and it's you could even put out a tweet. Now that's going to be scrutinized in a different way, I think. This report actually, I believe, did come through a tweet, which is
through social media.
Through social media, and I know that that's been circulated, and there's been a lot of responses since then. But I do think that the big question is the regulatory scrutiny of the company here. The report is what it is, and it'll be used and looked at, but some of the fundamental questions, or I guess fundamental aspects of the company that the report is pointing out, they may be looked at in a different way, just because of what they started to explore.
And it's interesting because not every activist short seller report is met with this type of reaction in the stock market, which kind of speaks to the reputation Hindenburg has. What can you tell us about sort of their track record with this type of thing? It seems to me like they're pretty good at knocking share prices down and leaving them down for a long time.
Yes, especially immediately. I mean, the shares today of Block were down 22%. They've since recovered a little bit, especially since the company responded, put out its own statement. But Adani, Clover Health, those were some of the big ones that at least I was tracking. They've recovered the 6-month period. Some of these stocks, they lost significant market valuation and then have, after a half of a year, gone back to before to where they were before the reports came out. So it really depends on the name, and I think to the extent of what is included in the report, how damning it actually is. And then also, if there's any information that comes out even after the report, either to prove it false or true.
Yeah, that's what I'm thinking at. I mean, Block could do no wrong for such a long time, and Wall Street loved it, right? And then it's down, I think, about 75% since August of, I think, going back to 2021. I mean, it's been way down a lot.
One of those high growth fintechs that
it was a
haven't been
pandemic darling.
Yeah.
It really was, right?
And none of them are performing too well in this environment, but you don't see that kind of instant knee-jerk reaction very often. It's pretty dramatic.
Well, I guess stay tuned, right, and just see kind of what the next step is. The stock, though, shares of Block still down about 16% here, off their lows of the day, but nonetheless a pretty significant hit. Kat, thank you so much. Glad you could come in and just kind of lay it out for us. Kat Doherty, finance reporter at Bloomberg News, here in our Bloomberg Interactive Brokers studio. And I thought it was important, too, Mike, what you said. Investors have worried about this before. They've worried about Cash App, specifically at Block. So it's been on the radar. It just feels like this is an amped up.
And it's a big thing in the gangster rap community, which is really interesting. You're not a gangster rap fan, but it's part of Hindenburg's part of their rationale is that a lot of scammers.
Yeah, well, certainly something we've got on our radar today. All right, you're listening and watching Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
3:21 on Wall Street. We do check the markets all day long here at Bloomberg. Stocks struggling for direction. 39 minutes to go ahead of the closing bell. We have got the Dow, S&P both lower, NASDAQ holding on to a gain. NASDAQ up 19 right now, higher by about 0.2%. Apple just turning negative, down now by less than 0.1%. Microsoft holding on to an earlier gain as techs rallied earlier today. We do have Microsoft shares up now by 1.2%. Bottom line here, stocks are struggling for direction. Banks do remain lower, even after Treasury Secretary Janet Yellen said in prepared remarks to lawmakers that the U.S. is ready to take further measures to protect deposits if needed. A day after the Fed decision, Fed a rate rise. Economist Francis Donald at Manulife says yesterday's rate hike from the Fed doesn't matter that much.
What matters and what actually shocks my economic and inflation model is not another 25 basis points or not. It's how fast they cut and when they start cutting. So the conversation is going to have to shift, I think, in the next few weeks.
Right now, we've got the 10-year yielding 3.37%, with the 2-year 3.76%. Spot gold up 1.3%, was trading back above $2,000 earlier today. Right now, $19.96. And West Texas Intermediate crude down 2.2%. WTI 69.37 a barrel. Your equity markets trading mixed, with the S&P down 9, down 0.2. NASDAQ up 0.4. The Dow, what a ride there, down 98 points right now. Keep in mind that the best level of the day, the Dow had been up 481 points. And that is a Bloomberg Business Flash.
Definitely keeping us on our toes. All right, Charlie, thank you so much. All right, well, Bloomberg Business Week, it is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to see if your small to medium-sized business qualifies for a payroll tax refund. If your business was impacted by the pandemic, this is your opportunity to take control of your business's future. To learn more, head to getrefunds.com. All right, Carol Massar along with Mike Regan live in our Bloomberg Interactive Broker studio on YouTube on Bloomberg Quick Take. We want to talk a little bit about something Bloomberg News gave you a heads up on yesterday, and that is the Ford Motor Company. We're getting more clarity, more specifics. The company predicting losses in its EV business, electric vehicle business, will grow to $3 billion this year as it spends big on new models and factories. The deficit matching its accumulated EV losses over the past 2 years. The stock right now a little bit lower, though we did see a little bit higher earlier in today's session. So let's get to it with Bloomberg News auto reporter Keith Naughton. He's with us following this via Zoom in Detroit. So Keith, $3 billion sounds like a lot. You were giving us a heads up on it yesterday. Why the losses, and put it in perspective?
Well, what Ford says, Carol, is that the EV business is like a startup inside Ford Motor Company, and like any startup, they incur a lot of losses as they spend for future growth. So what that spending is they are currently working on their second generation of electric vehicles. You know, they already have the electric F-150 Lightning pickup truck out there and the Mustang Mach-E. So now they're working on the second generation of electric vehicles, which will be ground up and cost a lot of money. And they are on a building spree. They're building their first new assembly plant in 50 years in Tennessee to build electric F-Series trucks. And they're building battery factories in Tennessee, Kentucky, and Michigan. So they've got a lot of factory construction going on, and they've got a lot of spending on new models.
You know, Keith, it seems to have caught the market at least somewhat by surprise that the loss would be this big. Correct me if I'm wrong about that, but what is the story there? Is just that this spending, these investments they're making are a lot bigger than what they projected, or at least what analysts were penciling in?
You know, Ford has said that they're planning to spend $50 billion in total on electric vehicles by 2026. The plan is to ramp up their factory production to be producing 2 million vehicles a year by the end of 2026. Last year, they sold about 65,000 in America. So it's a very steep ramp and a very big spend because, you know, they don't want to be left behind in this transition to electric vehicles, and they're trying to catch Tesla. The losses are rising, not going down. They had a $900 million loss in 21. They had a $2.1 billion loss on EVs last year, and then it'll be up 43% this year to that $3 billion figure we're talking about. So they're in this heavy investment period, but they say they will be profitable on an earnings before interest and taxes basis by the end of 2026. They'll have an 8% EBIT margin, they say, on EVs.
Hey, Keith, help me out, though. Like, to Mike's point, and, the stock earlier, Ford was up 2.6% earlier in the session before it moved a little bit lower. And I guess you've covered this inside and out, and I feel like the Wall Street community who covers Ford gets what they have to do. I get this concept of a startup within, a bigger, broader company. Is the street to some extent, kind of comfortable with it? I'm not seeing any analyst calls come out, any downgrades, at least not yet, or any kind of move. So the street aware that this is what it's going to take for this transition?
Yeah, Carol, actually, the $3 billion loss, which sounds awful, I understand, is not as bad as some analysts were projecting. There were projections out there of, they thought Ford lost $6 billion last year on electric vehicles. So while $3 billion's bad, maybe not as bad as the market expected. The stock was up as much as 2% in the morning. During the morning, also, Ford's CFO John Lawler was doing this teach-in at the NYSE with analysts. So, they were trying to explain this walk to profitability. I was listening in. The analysts seemed fairly skeptical that they could get to there from here. It's a big walk. Last year's EBIT margin on electric vehicles is negative 40%.
Ouch.
They say, yeah, ouch. Huh? So they say by the end of 26, they'll be at positive 8%. That's a lot. So analysts were skeptical, probably rightly so.
Keith, as a Twitter addict over here, it's hard not to notice the distraction Elon Musk has undertaken with his purchase of Twitter and getting very political on that on the site itself, turning a lot of people off with some of his political opinions and culture war type of opinions. So I'm wondering, what is the lane, do you think, and the strategy at Ford to actually take some share from Tesla? Does Musk's personality play into it at all, or is it just a matter of they want to make cheaper cars, better cars? What's their strategy entail for getting that share away from Tesla?
Right. So, Ford's strategy is they are going straight for the mainstream. Where Teslas sell best is on the coasts, right? They kind of sell to the converted, if you will, folks who are wealthy and are inclined to take actions to either because of climate change or because that's that's what is the current, going trend, and they have the money to afford that. Ford's going for the big middle in America that buy pickup trucks and buy Mustangs. The things that Ford is electrifying are these sort of classic names that have been popular in middle America for years. And so far, they're off to a very strong start. The F-150 Lightning plug-in pickup truck had 200,000 reservations when it went on sale last April. And they are doubling the capacity right now at the Mexican factory that builds the Mustang Mach-E. That'll be able to produce 210,000 models a year by the end of this year. And last year they produced fewer than 100,000. So it's working so far, but it's very early days for Ford. They are the second best seller of electric vehicles in America, but they're miles behind Tesla, which controls 2/3 of the EV market in America.
I keep wondering, Keith, in terms of a company like a Ford or a General Motors that still, thank God, they have internal combustion engine vehicles, right? Because they still make a lot of money off of that, right? And that's kind of the flip side. But having said that, I wonder how much of that is a drag, in terms of really being out there with EVs, right? Elon Musk is a pure play, doing it differently. And I just wonder if that longer term is it going to be a problem for Ford or GM or not?
Ford and GM, but Ford is saying that, internal combustion engine vehicles are still a growth business for them. They sell lots of Bronco SUVs. They sell, like 900,000 F-Series trucks every year. It's the best-selling vehicle in America since the first Reagan administration.
Wow.
So So there's a huge, I mean, you have to keep in mind that electric vehicles make up 5.8% of the U.S. market. So every 9.5 vehicles sold is still a gas-fueled car or truck.
And is the F-150 Lightning, the actual performance of that vehicle, enough to convert the type of people that already own the gas-powered pickup truck?
Yeah, it's an interesting question because, those folks wouldn't seem to be, they sell mostly in red states. They wouldn't seem to necessarily be folks who are, trying to address climate change in their vehicle purchases. But, what the Lightning has done, its popularity is actually with newcomers to Ford and newcomers to pickup trucks. Ford says, more than 60% of the sales of the Lightning go to these newbies, not to the traditional truckers. But eventually, if you're going to convert the fleet, the best-selling vehicles in America are the Ford truck, the GM truck, and the Ram truck. That's what Americans buy. And so if you're going to electrify the vehicle fleet in this country, you have to be successful in electrifying pickup trucks, which is, of course, why Elon Musk is doing the Cybertruck.
It's so interesting in terms of all that's going on.
I forgot about the Cybertruck.
How could you forget about the Cybertruck? That's because we're waiting, right?
Exactly.
All right, Keith Naughton, good stuff. Auto reporter at Bloomberg News, joining us via Zoom from Detroit. All right, let's get a check on world and national news. Off to D.C. we go. Our 99.1 newsroom, Nancy Lyons. She's there in the nation's capital. Hi, Nance.
Thanks, Carol. President Biden is marking 13 years since the passing of the Affordable Care Act, an accomplishment achieved during President Obama's time in office.
It's an extraordinary achievement by President Obama. And while the Affordable Care Act has been called a lot of things, Obamacare is the most fitting description. Obamacare.
Biden criticized Republicans for wanting to repeal the program, saying it would have a devastating impact. Ukraine is said to be plotting a counteroffensive against Russia very soon. That's according to Ukraine's top commander. And he'll have new tools to use. Kyiv has received its first 4 MiG-29 fighter jets from Slovakia. And the rest of Slovakia's MiGs will arrive in the coming weeks. Finland says it will donate another 3 Leopard 2 armored mine clearing vehicles to the fight as part of its 14th military aid package. And the EU is expected to approve plans to send Ukraine 1 million rounds of ammunition in the next 12 months. Well, there's now a new estimate of the financial toll a year of the war has taken on Ukraine. We get more on that from Bloomberg's Nathan Hager.
$411 billion. That's the latest price tag from the World Bank on Ukraine's reconstruction, and it is a significant increase from its last estimate of $349 billion just 6 months ago. Russia has stepped up infrastructure attacks throughout Ukraine since then. The World Bank says that onslaught has pushed more than 7 million Ukrainians into poverty and undone 15 years of development. In Washington, I'm Nathan Hager, Bloomberg Radio.
The CEO of TikTok spent 4 hours today on Capitol Hill in front of House lawmakers who wanted some assurances Americans' data is not being shared with China. TikTok is owned by the Chinese company ByteDance. Shou Chew insisted TikTok is independent of ByteDance. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here on Bloomberg Radio. Big day of swings for the U.S. stock market. The Dow at 1 point up, 481 right now. The Dow in the red. Lots going on. We head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, U.S. stocks well off their session highs as the regional banks are under pressure again. Dow's currently up 17 points. S&P's gained 4, while the Nasdaq pairs gains to up 85. The U.S. 10-year yield falls to 3.38%. Gold is up 26. Energy in the red. And Bitcoin is higher by 2%. Of the main 11 S&P sectors, only telecom and tech were in the green. And leaders to the upside in the Dow, Intel and Microsoft, while Travelers and Chevron led to the downside. Looking at those regional banks, Comerica is down 10.5%, Zion's 9%, and First Republic is off by 6%. In other news, Yellen says it is prepared for additional deposit actions if warranted. Ford sees electric vehicle losses ballooning to $3 billion in 2023, and the Charles Schwab CEO says it could ride out a run on deposits. Wrapping things up, Block plunged 15% after Hindenburg Research disclosed a short position. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 17 and a half minutes left in today's trading session. We're just bouncing off our lows of the session when it comes to the equity trade, but we're well off our highs of the day. Bank stocks still seeing some pressure. Looking at the SPDR S&P Regional Banking Index, it is still down about 3% in the trade. And Mike, we've got that 2-year note with a yield of 3.78, so staying well below that 4% mark. We were up there, I think, earlier in the session.
Yeah, absolutely. And anytime you see those lower yields, it signals a few things. I mean, are people worried about growth? Is it they think the Fed's done? But the best you can say is it does perhaps alleviate a little bit of the banking stress that we've seen, especially the further out the curve you go. You know, those mark-to-market or not losses on banks' bonds. So,
right,
yeah, I think everyone's happy to see a drop in yields these days.
All right, well, let's see what our next guest has to say about all of this. Time for our Drive to the Close guest, Amanda Agati. She's back with us, Chief Investment Officer at PNC Asset Management. She is with us today on the phone in Philadelphia. Amanda, good to have you back with us. It's been an interesting 24 hours. The Fed decision, the continuing bank questions and nervousness, the dialing back, it feels like, from Treasury Secretary Janet Yellen when it comes to maybe backstopping bank deposits. How has any of it, if at all, changed your thinking about investment strategy, the right strategy in today's environment?
Well, thank you so much for having me. There's a ton to unpack. We could be on the line together all day going through all of those variables, a lot of competing narratives. I would say at the end of the day, it hasn't really changed our approach to investment strategy or portfolio positioning. We've been running a defensive playbook for the last few months here, trying to keep our investors invested, not pulling the ripcord and raising a ton of cash here, staying well diversified, focusing on quality. I'm not sure that anything over the last 24 hours has changed that dynamic at all, but certainly the end state for monetary policy is becoming a lot clearer and probably sooner than what the market has expected. So that's driven a lot of market leadership and rotation. The flip side of that is, is there another shoe to drop? What are the signs of stress that are building here? And so I think this is the arm wrestling match that the market's just going to continue to face here, and it's sort of leading to overall kind of a directionless market, but under the surface, clearly a lot of volatility.
You know, Amanda, it's interesting. I think the cliche that you hear, that everyone hears on their first day of trading school or investing school, whatever it is don't fight the Fed. But in this case, you know, I wonder which way you shouldn't fight the Fed, because on one hand, they are obviously raising rates. Chair Powell said there's no plans to cut them this year. But on the other side, everyone is fixating on that Fed balance sheet, and the discount window is wide open. The Fed has, you know, flooded the financial system with cash in the last few weeks. So which way, you know, should you not fight the Fed, on the balance sheet side or the interest rate side?
I think it's really more on the interest rate side. You know, if you look at the Fed funds futures market, there's still a disconnect between what the Fed has been saying, what the Fed is actually doing, and what the market thinks the Fed is going to do. And so I think it's much more of a focus there. And don't fight the Fed. I have gone on record many times as fighting the Fed. This is an easy target to critique what they're doing or not doing. But for, you know, the last, call it 6 or 7 months, I've been really trying to stay close to what the Fed signaling effect is and what they're actually doing. I think they remain very much committed, as Powell said yesterday, to fighting this inflationary battle. But obviously we're starting to see some signs of stress. And so it makes total sense for them to slow down here. But I think the market trying to call the Fed's bluff that we're going to see a number of cuts here in the very short run feels kind of delusional.
Banks, is there an entry point for you with the selling that we've seen?
Well, I don't know that I want to necessarily comment too much on the investment thesis around banks or an entry point, but we definitely think that there's a lot of high-quality assets, especially relative to deposits out there. And sure, there's signs of stress building in the system, but on balance, we feel like the industry is in pretty good shape. I mean, of course, we're watching financial conditions tighten here. Fed took a step, you know, further in that direction yesterday. So I'm not saying that we're, you know, out of the woods yet. But, you know, I think on balance, we're in pretty good shape. A lot of people, you know, are making a lot of comparisons to the financial crisis. And I hate to say it, but it's a little bit different this time. A lot of controls, a lot of oversight, a lot of stress testing, a lot of really stringent capital and liquidity ratios in place make the industry in a much better shape overall this time around relative to last time.
Conversely, if I may, in terms of, I mean, financials have been on our radar. They're the worst performing major industry group in the S&P 500 over the past 2 weeks. Surprise. But at the top of the list, or the second best performing, is information technology, and the best performing is communication services. We've seen investors moving into some of the big tech names. What's your call on that group?
Well, I would say that group probably has gotten a bit far ahead of itself, you know, but we're not of the opinion that we're going to see meaningful rate cuts here in the short run, and we're certainly not headed back towards a zero interest rate policy dynamic. And so the tailwinds for those areas are not going to be anywhere near what they have been over the last few years. And I think this is just the market trying to quickly claim victory in this battle against inflation and thinking that rates are going to come down a lot. We certainly have seen rates come in and come down a lot here in the last couple of weeks. And so I think it's just simply that. I don't know that it's a formula kind of rates come down, growth stocks, the discount rate associated with them should be improving. But I'm not sure that the fundamental backdrop justifies how far growth exposures have rallied year to date.
You know, Amanda, Fed Chair Powell obviously likes to talk about the long and variable effects of raising interest rates. Obviously, we've seen that crop up very suddenly with the stress in the banking sector. Commercial real estate's seen better days. Where else would you be looking to see some stress build up because of this aggressive rate campaign we've seen?
Amanda, just got about 25 seconds. Yeah, go ahead.
Yeah, I think it's really hard to answer that, but I think there is probably broader stress underneath the surface there in terms of balance sheet management across the market, spectrum and across the market capitalization spectrum. So I'd be a little concerned about smaller and mid exposures in this environment.
Well, good to check in with you. Really appreciate it. Again, Amanda Agati, she's Chief Investment Officer at PNC Asset Management, on the phone from Philadelphia. We're just off our lows of the session on the equity side of things, up 13 on the S&P, Dow up 84, and the NASDAQ a gain of about 1%, up 119 points. Carol Massar, Mike Regan, and this is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Charles Schwab, CEO, says the firm could continue to operate even if it lost most of its deposits over the next year. Walt Bettinger made the comment in an interview with the Wall Street Journal, saying there would be a sufficient amount of liquidity right there to cover if 100% of our bank's deposits ran off. He says the company would not have to sell a single security. Today, Schwab shares, they are trading lower by 5.4%. J.P. Morgan Chase is planning to test new technology that would let consumers pay with their palms or faces at certain U.S. merchants. The bank, home to one of the world's biggest payment processing businesses, plans to roll out the service to its broader base of merchant clients if the pilot program goes well. J.P. Morgan Chase shares today, they're down now by 0.1%. Citigroup CEO Jane Fraser says regulators have done a good job in handling American bank failures, and they are not spread across the system. She spoke about the outlook for more failures in an interview with Bloomberg's David Rubenstein at the Economic Club hub of Washington.
There could well be some smaller institutions that have similar issues in terms of they've been caught without managing the balance sheets as ably as others have done. And it's quite likely there may be a few of them. We certainly hope there'll be fewer rather than more, but again, it should be manageable.
And Citigroup shares down now by 0.7%. First Republic lower after an earlier gain of almost 10%. FRC down 5.9%. Those are the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session, getting ready to join our TV colleagues for our cross-platform coverage, counting down to the close on another busy day here at Bloomberg and certainly in the financial markets. Having said that, one of the most read stories on the Bloomberg, Mike Regan, is an individual you've actually talked with.
Yeah, his name's Do Kwon. He was the founder of Terraform Labs. Now, if you remember when all the crypto nightmare started last year, this guy was kind of at the center of it all because he had what's known as a stable coin, a cryptocurrency that's supposed to maintain a $1 peg.
Right.
And usually the way they do that is they keep a bunch of real dollar assets in a bank somewhere or invested in money markets, that sort of thing. His whole thing was not to do that, to just have another cryptocurrency that he created, his project created, back it up. And it didn't work.
Uh-oh.
But when it failed, there was something like $60 billion at stake in this project, and it all went to zero, basically. So the authorities in South Korea started poking around, and he just took off almost a year ago. Has just been rumored to be here, rumored to be there, and it sounds like they finally caught up with him today in Montenegro.
Yeah, exactly. I guess he was trying to fly to Dubai using falsified Costa Rican traveling documents. This is according to Montenegro's Interior Ministry. They put out a statement today too. I guess he was found along with Han Cheng-jun, and I guess the two of them were trying to actually fly out. They were found with Belgian and South Korean traveling documents. So it sounded like they had a bunch of stuff, according to the ministry. Forgive me, I'm just reading through the story.
Yeah, trying to fly to Dubai, which is a very crypto-friendly jurisdiction. And no coincidence, I guess it doesn't have an extradition treaty with the U.S. So
I would want to go there, too, if I was on the lam for this.
It's a hot destination for crypto fugitives, I guess.
What's going to be interesting, the police took 3 laptops, 5 mobile phones from the pair. And so I guess it'll be fascinating to see what maybe they uncover.
Yeah, it was never clear whether this was just a crypto project that blew up or whether, there was actual fraud and crimes involved. So I guess we'll finally get to the bottom of it with this case.
All right, right now, folks, Mike and I are going to head over to our TV colleagues, talk about the markets, bring you down to the close here. Bloomberg Beyond the Bell. It starts right now.
Here on Bloomberg Television, full market coverage as always, as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Carol Massar and Mike Regan. Welcome to our audiences across all of our Bloomberg properties, television, radio, originals, and those folks streaming on YouTube. Pretty wild day once again, Carol Massar.
Yeah.
It looks like we're going to finish in the green, though, at least for the S&P and the NASDAQ.
Yeah, absolutely. We talked about it earlier. I mean, we continue to see pressure on the bank names, despite Janet Yellen coming out earlier and talking about, deposits and seeming to be much more confident, or some confidence in terms of shoring them up should there be future problems. But you look at the regionals, Mike, they're down about 2.6%. If I look at the KBW Bank Index, it continues to be under pressure, down about 1.7%.
Yeah, Carol, it's interesting. What's doing worse than even the banks today? The energy sector. And it reminds me of how last year none of us could shut up about oil prices. And I feel like we got to talk to them about oil on the way down now. Oil back below $70 a barrel today. Looking at a trailing 12-month basis, Oil's down about 40% compared to this time last year. The Bloomberg Commodity Index is down about 20% over that time. So, Katie, if we're all still worried about inflation, here's a very strong disinflationary push in the commodities and energy market that I'm thinking maybe is not getting as much attention as it should.
Yeah, I mean, it's a good perspective to have that you have seen energy prices really calm down here, but inflation's still very much a problem, especially if you're Jerome Powell. We heard that again yesterday.
We certainly did here.